public policy and the fun with the tax law that we get to look at each year. Okay, another tool, and this tool typically works you know, for more of the type 3 families, but not necessarily, it's not, you know, we're not limited to the type 3 family, and that is the income shifting. So the UTMAs and the UGMAs, those really are considered gifts to a child, and it's an effective way to give the child some money. However, remember, it's going to be a part of the student's resources, and if you're a type 3 family and you're not going to be eligible for need, well then, you know, there's no big deal. The thing that I would mention about UTMAs and UGMAs is that it's probably the thing you have least control over. So you can give the money to the student, but there's no guarantee that the student is going to pay for school or go to school with it. An upside is that if they don't go to school, there's no penalty for spending the money on something else. But, you know, it's just something to be aware of. The next income shifting item we have is gift of an income producing property. So an example of that, I was talking with some farming friends of mine, and we were talking about, you know, one thing that they could do is they you know, they have a farm, and they have, you know, many different types of pieces of equipment that they could give, you know, their student a tractor, and now the student owns the tractor, and they turn around and rent it back to the farm, and they get paid an income for that. So what we're doing is basically shifting some income to the child, and is taxed at much more favorable rates. I've got a note here that we need to be aware of kitty tax rules, and that's definitely part of the plan, but it's one of the strategies. And so, you know, when we're looking at a plan and we're dealing with a type 3 family, these, you know, it's definitely a tool, and it can be a very effective tool, much like the next one, a gift of appreciated property. So an example here would be if, you know, you have, you know, again, kind of going back to my Intel people, you have your restricted stock units or your stock purchase, you know, whatever kind of incentive stock option that you have your basis in that stock is much lower, and for the gift rules, your basis is what is considered for the transfer. So right now the annual gift exclusion is $13,000. So while the market value of the security, stock, or investment, whatever the property is, it may be much higher on the market, but your tax basis is $13,000, and you can transfer that to them, and then the child is able to benefit from all that gain, and it's taxed at a much more favorable rate. And that's, you know, that's a little more complex, and there's a lot more to it. Of course, you know, the tax code, you know, definitely want to be involved with our tax professional, but it's definitely an option and a very effective tool in helping to reduce your overall out-of-pocket cost. The last income shifting topic that I have up here is the child's earnings. So anybody who has, you know, has a business. So I love this example because, you know, I can personalize it. And that is, you know, as a partner here at Lighthouse, Jim, if you're listening, I could, you know, say, gosh, we need some new faces up on our website. Let's hire some models, and we'll take pictures of them and put their pictures up on the website. So the models would be my children that we could pay model fees to. That's earned income from them. Now we can shift that earned income into a Roth IRA. There's some rules around how that can be invested, but the point is that we can get some money for them into a very tax-favored type of an account. And oh, by the way, because they're my children, I don't have to pay employer tax on it, meaning I don't have to pay Social Security or Medicare on those wages to that child, whereas anybody else that we would hire at Lighthouse, we have to pay those employment tax. So it's just it's a way to really reduce your overall tax burden, shift some money to the child that can then later be used for education funding. In the meantime, they're 10 and 8. We have some years for it to appreciate. In any case, that's an example of that. Does anybody have any question on the income shifting?
Hi, Debbie. Right now we don't have any questions, but we'll circle back to it.
Okay, good.